Good morning, ladies and gentlemen. Welcome to the show. Today, is Friday, April 19th, 2019. And, I'm going to do a show this weekend where I'm going to talk about something called wealth cycles. Now, credit to Mike Maloney. He came up with this term, wealth cycles, and how it works. A lot of people don't like Mike Maloney, but I'm going to tell you what. He's one of the best chart mans out there, of charts and stuff, and he's able to predict things into the future. He got all of this, what's happening now, right years and years ago, a long time ago. He got this situation that's happening right now. He got it corrected just exactly the way it's going to go. And he's, just like me, he's predicting a hyperinflation. Here's the thing. These wealth cycles are very interesting. Now, we got three asset classes here. The common guy out there who hasn't got a lot of money can take advantage of these three different assets over the next 2 or 3 years to yield a small fortune from. These three assets are the precious metals, cryptocurrencies, and the real estate market. If you play them correctly using a wealth cycle. Now, this is what the show I'm going to do this weekend is going to be about. It's going to be about wealth cycles. So, let's take a look at what's going on with real estate. Let's start the charts right here. Now, here's the thing. The global real estate right now, all of it is in a bubble that was created by the central banks and zero interest rate policy for many years. And this global real estate bubble, a global real estate bubble, China, the United States, Canada's specifically bad. This global real estate bubble is getting ready to pop in this recession that's coming. Now, this plays into these wealth cycles. Plays in big time. I'm going to explain how in the show I do this weekend about wealth cycles. Gold plays into it too. And so does cryptocurrencies. It's all about the timing, guys, and I'm going to explain what I think about this on my show I do this weekend, so really stay tuned to this show. Now, the Canadian real estate bubble's getting ready to burst, and this is really bad because it's connected to an awful lot of money, and as it bursts, what's going to happen is the banks have lent money out to people all across Canada based on a lot on their income and on the valuations of their homes. Tremendously over-leveraged, the Canadian economy, so much so that it's going to affect, when it pops, it's going to affect the Canadian banking system very adversely. This adverse effect to the Canadian banking system in turn is going to spill over to the American banking system because the banks are all interconnected. Now, there's big players out there who are shorting the Canadian banking system already because they realize that when the real estate bubble pops, they realize how it's going to affect the Canadian banking system, and they're already getting in there. The sharks are already coming in and are already circling the Canadian banks. They're already just basically... They know that this problem's going to come, and they see huge problems coming to the Canadian banking system. Probably something like what we see in Italy. Maybe worse. Okay? So, the sharks are circling already, and they're not circling so much the Canadian real estate market, but the result of what that real estate market bursting is going to do to the Canadian banks. They're circling the Canadian banks, the sharks are. Already, and they know this. So look, let's move on. Let's move into the markets today. Silver today is closed. It's flatlining today, just like it will be all weekend. It stopped at $14.98. And it's the same way with gold. Here's gold. It stopped at $14.98. The markets are closed today, but the Bitcoin market is open. It's up and running today. We're looking at 52.26. Now, you know what? She's been holding above $5,000. Now, when I do this wealth cycle show this weekend, three primary things I'm going to be talking about, three asset classes, are Bitcoin, gold, and the real estate market, and how these are going to play into a wealth cycle. Okay? At least my opinion of how they're going to play into a wealth cycle. So let's take a look now at cryptocurrency market capitalizations. What we're looking at for the day is 179.5 billion with a Bitcoin dominance 51.9%, and we see most of the coins are trending upwards. Litecoin, my favorite coin, 81.53. It's good. It's nice and high, above 80 bucks now again. So we're seeing this happen with these coins. We're seeing the prices increasing on some of them. Binance coins went up the most, probably. Ethereum has went up. It's at 173.33 today. It seems like XRP, it just can't leave this range of about 33 cents a piece. It's kind of stuck in that range. But you know, I'm going to tell you, I know there's an awful lot of hype around XRP, but I just cannot get it out of my mind, the 50 billion of them that they have in reserve. That is very problematic to me about investing in XRP. Now, I don't have any problem at all with Bitcoin and Litecoin. One of the reasons why I'm investing in them, I think, is because these are HODL coins, and at the same time, they're putting a network in that's going to be able to allow them to scale, which is called the Lightning Network, and I can see them solving all the problems in the Lightning Network eventually. But even without the Lightning Network, Bitcoin and Litecoin could function even without the Lightning Network. Because one of the reasons why is, as time progresses, you're going to find that Bitcoin transaction volume is probably actually going to decrease or stay level. And Bitcoin doesn't really need the Lightning Network to scale, because Bitcoin, I think, is going to go to such astronomically high prices, and I don't really think it's ever going to be used as an actual currency. People are never going to buy a cup of coffee with it. You have to understand something. How many guys do you see go in to Starbucks, and the girl gives him his coffee, and he plunks down a 1 gram gold coin on the counter and says, "Here, let me pay for my coffee with this"? Never. You never see that. So why are you going to see that with Bitcoin? Because Bitcoin is going to be basically the digital form of gold. They're not going to use it for making billions of transactions. It's not what it's going to be used for. It's going to be used for moving massive volumes of money from one place to another. So corporations and stuff are going to keep Bitcoin as a store of value for their corporations, or I should say, more I'll use the term store of value, even though that's a little bit politically incorrect as to the term that should be used for it. But Bitcoin is going to be just like gold is now. You know, it's going to be their capital reserve for like corporations and stuff, and be able to keep a tremendous amount of money in Bitcoin, and be able to transfer that money to, say, to another corporation, say they want to do a buyout or whatever. You know, this is where it's going to go. Anyway, let's move on now to the Dow Jones Industrial Average. I don't think the market... Is the market open today? I think that today is some sort of a holiday. Let me see. Yeah, so we're staying with yesterday's Dow Jones, but here's the thing about the Dow. The Dow's been pumped up an awful lot right now. And this little period I think we got coming, where we're heading into this recession, this is deflationary, and we still got the carryover effects from the quantitative tightening. That is still ongoing. And so I think this is going to yield a market correction in the not too distant future. And then I think that is going to yield that market correction that's coming is going to activate the Fed. And I think that's when you're going to see that they're going to drop the idea of an interest rate hike, and they're probably going to start talking over interest rate cuts, and also they're going to make firm plans for quantitative easing 4 at that point. And they're probably going to enact quantitative easing 4 in order to stop the market decline. At that point, once quantitative easing 4 is in place, there's no limit to how high these markets can actually go once they're being stimulated again with cheap, easy money from the Federal Reserve. It's as simple as that. Now let's take a look at crude oil. Crude oil is been slowly creeping upwards in price. As long as crude oil is creeping upwards in price, the Canadian dollar is going to remain firm, probably in around 73, 74, 75 cents. We're going to take a quick look at the Canadian dollar this morning, and we can see that it's at 74.72. There's been no real major declines in the Canadian dollar as of yet, but I can see a time coming in the not too distant future where probably the Canadian dollar is going to have a rough time, a rough go of it, especially with this real estate market and these bubbles bursting here up here in Canada. This could cause massive problems for the United States economy. Let's take a look at U.S. Treasury yields. Now, these Treasury investors, they're really on top of things. And there's a reason why these yields have been driving down so low. And there's also a reason why the short end of the curve, the yields are so high on the short end of the curve. I mean, we got a yield curve inversion here. You only have to take a look at this. When you see that the U.S. 1 month is yielding more than the 2-year, it's yielding more than the 3-year, it's yielding more than the 5-year, and it's almost yielding as much as a 7-year Treasury. And we see all these bond yields falling. Okay? This gives a distinct signal. These guys are on top of things. These bond traders, they have to be. And they do not want to invest in the long term. They're investing in the short end of the yield curve, driving the yields up on the short end of the curve. This means that they are scared of the economy. This economy is not what it appears to be. They see this recession coming. They don't want to have their money locked up for a long period of time because they see this recession coming. They see the recession coming most definitely. Let's take a look at now at the dollar. The dollar is at 97.40, and we see a dipsy-doodle down and a dipsy-doodle back up today, but it's staying strong. 97.4 is strong for the U.S. dollar. So this has been your market report for today. Thank you guys for tuning in. Make sure you get my show coming up this weekend on wealth cycles. And you guys have a great weekend, and we'll probably see you on Monday after I do the show on wealth cycles this weekend. So, bye-bye, guys, and give me a thumbs up. See you later.